Okay, so we're all seeing this incredible boom in artificial intelligence, right? It feels like every single week there's some new, mind-blowing breakthrough. But behind every single one of those chatbot answers and every generated image, there's this massive, hidden hunger for one thing: raw power. So how in the world do you fuel a revolution like this? Well, let's dive in. And that really gets us to the heart of the question we're digging into today. This whole digital revolution is creating a very, very physical problem. How are you going to power a world that's getting more electric, more intelligent, and hungrier for data every single day? It's a colossal challenge, for sure. But for some companies, it's also a historic opportunity. The scale of this new power problem is, well, it's staggering. We're not just talking about a little bump in electricity use. No, we are seeing a fundamental shift in demand that's pushing our existing power grids to their absolute limits and forcing the entire industry to rethink its future. Just take a look at Texas, which is a huge energy hub. Even before all these massive new AI data centers have really come online, the total power consumption there has already jumped by nearly 30%. And that's just in the last 5 years. This isn't some future prediction. This is what's happening on the ground right now. So what's causing this massive surge? Well, it's kind of like a perfect storm of 3 really powerful trends hitting all at once. First, you've got the general electrification of everything, cars, home heating, you name it. Then you have manufacturing coming back to the US, and those are some seriously power-hungry factories. And then the real kicker: the explosive growth of data centers needed to train and run all this new AI. So right in the middle of this high-demand, super tight market, you've got one of the country's biggest power companies, NRG Energy. And they're not just surviving, they are absolutely thriving. They have positioned themselves to cash in on this unprecedented demand, and believe me, their latest results tell a really powerful story. Just how well are they doing? Get this. In the third quarter, NRG's adjusted earnings per share leaped up 32% compared to the same time last year. That is a massive jump, and it just goes to show how profitable this new energy landscape can be. And to put that number in perspective, the company posted an adjusted EBITDA of $1.2 billion for the quarter. That is the single highest quarterly result in the company's entire history, ever. Of course, behind these record-breaking numbers, there are people. During their big earnings call, NRG's CEO, Larry Coben, he made it a point to credit the company's 18,000 employees for making it all happen. It's a nice little nod to the incredible execution it takes to pull off results like these. So the big question is, how did they pull this off? And maybe more importantly, how are they planning to keep this incredible momentum going? Well, it all comes down to a really clear 3-part strategy that's designed to meet the power needs of the 21st century head-on. Okay, here's the game plan. First, they are going all in on signing long-term power deals directly with those massive data centers that need all the energy. Second, they're buying up existing, reliable power plants to give their capacity an immediate boost. And third, they're not just buying, they are building the next generation of power plants from scratch. So let's zoom in on that first piece, locking in those data center deals. This is not about just selling power on the open market day by day. No, this is about partnering up directly with the big tech players and data center developers to become their go-to long-term energy provider. And they are making some serious progress. NRG has already signed deals for a grand total of 445 megawatts of data center capacity. Now, what does that even mean? Well, that's enough juice to power several huge data centers or even hundreds of thousands of homes. A ton of power is already spoken for. And here's the crucial part. Demand is simply outrunning supply. The market is so hot right now that NRG recently raised its target price for these long-term deals. That's a huge signal that the power providers are in a really strong negotiating position. Signing up customers is one thing, but you still have to actually make the electricity to deliver on those promises. And that brings us to how NRG is gearing up for the future, a massive expansion by both buying existing power plants and building brand new ones. Now, the absolute centerpiece of their acquisition strategy is this monster deal to buy a whole portfolio of power plants from a company called LS Power. And this isn't just some small add-on. This is a totally transformational move that's going to dramatically expand their scale across key markets. I mean, the sheer size of this deal is pretty staggering. We're talking about a $12 billion enterprise value. It's expected to add over $1.6 billion in annual EBITDA and over $1 billion in free cash flow. This fundamentally rewrites the financial story for the entire company. But they're not stopping there. They're also building. This here is a look at a brand new power plant being developed, the T.H. Wharton project in Texas. And it's one of several projects getting these low-interest loans from the new Texas Energy Fund, which was set up specifically to encourage building new, reliable power plants. And they're thinking even bigger than that. NRG has teamed up with the heavy hitters, GE Vernova and Kiewit, to develop up to 5.4 gigawatts of new power plants. And here's the key part. This new capacity isn't just for the grid we already have. It is specifically aimed at building brand new power sources to serve the brand new demand coming from data centers. Okay, so they've laid out this incredibly ambitious plan, but what's the timeline look like? When is all this actually going to happen? Let's take a quick look at the key milestones they have on the roadmap. So, things are going to start moving pretty soon. That huge, game-changing LS Power deal, that's expected to close in the first quarter of 2026. Just a few months after that, their new T.H. Wharton plant down in Texas is going to come online. And then, starting in 2028, those massive new data center contracts start to kick in and ramp up all the way through 2032. It is a multi-year roadmap for some serious growth. And here's the final thought that kind of blew my mind. The company put out a 14% earnings per share growth forecast. And here's the incredible part. That number doesn't include a single penny from any future data center deals. It's all based on their existing business and the acquisitions they've already made. So it really makes you wonder, in this new AI-driven world, is this aggressive strategy of buying, building, and partnering directly with big tech the new blueprint for the 21st century power company?